Hey, this is Warren Redlick. I'm starting a new series to make sense of the chaos in the world of AI. You can see there's this whole panoply, ooh, good word, panoply, this whole panoply of sectors and companies within those sectors that are really having a big effect on what's happening in AI. And I think it helps to try to understand this. We have a lot of companies that you're familiar with, some companies you're not familiar with, but they are stocks traded on the stock market. And then we have a few that are sort of maybe they're traded, maybe they're not, maybe they will be soon, but the pure frontier models are currently not traded. And then China's in the background, and you might be able to buy some China stocks, but a lot of people won't buy China stocks. So I think this is a good conversation to start. In this episode one, we're going to do sort of a summary of all the different groups and the companies within them. And it's arbitrary to some extent how I group these companies, but we're going to start with chip design, accelerators, and networking. And there's some variation within this, but the big player in all of this is NVIDIA. I'm leaving Apple out of the story because, as far as I can see, Apple is not really a player in AI yet. It has the assets, it has the devices reaching everybody to potentially make AI matter. But so far, Apple just isn't doing anything that's noticeable that I can see in AI. NVIDIA is probably the 800-pound gorilla in the entire AI space. They are the largest company. They have nearly dominant position or arguably dominant position in chip supply in the racks that go into AI data centers and a lot of other sectors. They've grown from nearly nothing to this monster company, and Jensen Huang has led them in a great way. He's just done a spectacular job, spectacular team, doing great things. In the face of concerns about frontier models being closed, NVIDIA has now got an open source model and they're supporting open source models. They support a lot of companies at a lot of different sectors, and Jensen does a really good job of promoting different companies that he thinks are doing great things. And of course, as an Elon fan, I appreciate that Jensen says a lot of good things about Elon. And fundamentally, NVIDIA probably makes the best all around chips. In terms of their design, they don't manufacture the chips, but in terms of the design, they probably make the best all around chips. Their plan going forward, as I understand it, is their next generation Vera Rubin hardware, which is already shipping, will eventually be shipping 1,000 racks a day, which could lead to 600 plus $1 billion a quarter in revenue, which is something like 8x their current revenue. So the potential for Nvidia to be a really monster company as a stock to invest in is really big. And full disclosure, Nvidia I think is now my second largest investment. My much larger investment is Tesla. That's the biggest investment I have by far. But Nvidia, Google, and SpaceX are my other investments. I believe I've got Nvidia at number 2 at this point. In this group, we also have AMD. AMD is sort of like Nvidia Light, very aggressive, innovative company, great team doing great things. What's notable, what I notice about AMD is the stock is priced fairly high compared to, let's say, Nvidia, compared to their supply chain. I don't understand yet how AMD can grow faster than its supply chain. And I don't think this is about demand. They all make good products. There's demand for everybody. The question is supply. Can you get enough wafers? Can you get enough output from TSMC and other fabs? Can you get enough memory chips in order to build the systems at the scale you need to achieve that growth? And AMD is not first in line for any of these companies. NVIDIA's got first dibs on everything TSMC does. Google is ahead of AMD. Elon is probably ahead of AMD. And there may be others who are ahead of AMD on the line. Same thing when it comes to Micron and SK Hynix and Samsung. AMD is not the first company on their list of who they're supplying to. If somebody else makes a bigger demand for memory, they're probably going to support them first. And AMD has a particular problem. They're doing great stuff. I don't want to take away from what they're doing, but their next generation rack system uses 50% more memory than NVIDIA's. Number one, that means their cost is higher. They're trying to undercut NVIDIA on price. So your cost is higher and your selling price is lower. And you have a vulnerability that it's hard to get memory chips. And you need memory more than NVIDIA does. So that's a challenge. Broadcom is in an interesting space where they don't have the classic GPU product. They help other companies make custom ASICs, custom chips that are in the same ballpark as GPUs, but slightly different. So Google's TPUs are partly made with Broadcom, and several other companies are designing chips with Broadcom. And Broadcom also makes other hardware, including networking hardware that goes inside data centers, that may go inside rack systems. They do a lot. Very interesting company. I don't think Broadcom is particularly overpriced or underpriced. And I'll say this, I don't think I understand Broadcom's business as well as I understand the others. I tend to think in napkin math, and Broadcom's business is a little too complicated for me to, it doesn't have like a simple unit. I want to hear a simple unit, an NVIDIA rack. right? An AMD rack, robotaxi ride, a gigawatt of compute. Like there's things I can sort of piece together as sort of like here's the unit, here's the revenue per unit. I don't haven't figured out yet what's Broadcom's biggest business and what's their revenue per unit for that business and how does that scale. That doesn't mean they're not a good company to invest in. It's just I don't understand their business well enough yet, and I don't invest in companies I don't understand well enough. It, if you understand Broadcom better, go for it. I included Intel in here. Intel is sort of a fab, sort of a chip design company. They're a legacy company that's trying to get back into this to the fray. At this point, I would say Intel is an open question. Can they make it? Can they succeed? It looks like they might succeed. They might succeed in becoming a significant fab. They might succeed in becoming significant in the business again. Right now, for me, they're not there yet, but I wanted to include them in the list. It's worth tracking them and keeping an eye on them. Fundamentally, I think Intel's biggest problem is going to be bureaucracy. This is a problem for some other companies as well. Can they overcome their history of bureaucratic decision making and really make bold decisions that they need to make in order to get where they want to go? I've also included in the bottom layer here ARM, which makes important chips for AI, Arista and Marvell, which are networking hardware similar to Broadcom's part of Broadcom's business. Marvell, I think it was Marvell that Jensen Huang said was going to be the next $1 trillion company. They're trading around $200 billion. I'm not sure they're going to get there, but Jensen was certainly very positive about them. Arista and Marvell are still significant companies, but they're a bit smaller, and we'll see where they go. But in the grand space of what's going on with AI, everybody's sensitive to the supply chain succeeding, and everybody needs all of these supply chain companies to succeed. If anybody falters, this is sort of middle of the supply chain, right? But if Arista and Marvell don't make the networking hardware, if there's a problem in the networking hardware part of the chain, then the data centers don't get built. If the chip design stops, the data centers don't get built. If the chip fabs stop, the data centers don't get built. There's all these things that need to come together. The memory chips, there's all these different components. And so everybody's important to an extent. Some might be small players overall, but if they stop, it can slow down everything else. Next up, I want to talk about fabs and the monopolies within the fab hierarchy, which is TSMC and ASML. Intel has fabs, Samsung has fabs that make chips. There may be others, but the dominant player in the chip fab industry is TSMC, and the dominant player in the supply chain to the fabs is ASML, a Dutch company. TSMC from Taiwan, ASML from Holland, Netherlands. ASML is just an absolute monopoly. There's some talk that there's some Chinese company that starting to make some lithography machines that may be anywhere from 10 to 15 years behind ASML. Elon is more positive about them. Elon recently said the Chinese are making more progress towards making EUV machines. I can't know. I think Elon knows better than I do. But right now, and probably for the next 2 or 3 years, these two companies dominate a core of the supply chain that feeds the chips, the AI data centers, even the inference hardware that goes in Tesla cars and Optimus robots, pretty much anything that relates to AI, it goes through here. And these are both choke points. Something happens with Taiwan, something happens with TSMC, there's a problem. If the European governments decide they want to restrict ASML, that can be a problem. So there's a lot of potential here, but these two companies are dominant, very successful, very innovative, super knowledgeable, great collections of talent that put together great work. They work well with those that they supply. So ASML is probably going to supply EUV machines to Tesla or SpaceX for their fabs. They're supplying, they definitely talked about supplying EUV machines to the South Korean memory manufacturers. There are memory fabs that are separate from the logic fabs, the logic and GPU fabs, right? The memory fabs make memory chips, and I don't think they tend to make other chips in the memory fabs. Samsung, I'm not sure because they make both memory and they make regular GPUs, CPUs, so I'm not clear on that one. And just full disclosure here, it's harder for me to get a full understanding of Chinese companies, of the Chinese companies and the Korean companies. A little easier for me to get a wrap on the Japanese companies because I speak Japanese. European languages I'm a little better at, but and Taiwanese, TSMC is well understood in the West, right? But then you get into some of the Chinese companies, you get into some of the other things. And it's like it's all right. It's hard for me to wrap my head around that. There's so much chaos going on in Korean markets right now. I don't understand the chaos there. Well, we'll talk about the Koreans later. I just want to focus now. TSMC appears to be executing well. ASML appears to be executing well. Both of these companies, what I see is both of these companies are reluctant to grow fast. They're growing and they're accepting the signal from their customers that they need to grow faster, but they don't want to grow faster. And for the demand for AI, this is one of the reasons why I think the demand for AI is growing very, very fast, and the supply of AI is constrained. And this is one of the core constraints. It's just very simply the TSMC CEO and the ASML CEO and the management teams are reluctant to grow too fast because they've seen industry cycles before. And if they invest too much in their capex to enable them to grow more, and then there's a slowdown in the demand that they face, then they have a problem. So they're happy to take good margins, not overproducing, than they are risking problems if they overproduce. And this is where, like, the story that AMD is going to grow so much or Micron's going to grow so much, this is where that story sort of falls apart. If their supply chain doesn't grow, then they don't grow. So everybody depends on ASML. Micron depends on ASML. AMD depends on TSMC and ASML. If these guys don't grow fast enough, the whole story falls apart on the supply side. The demand is still there. A lot of companies still make money, but the growth story becomes a challenge. And then the high flying stocks that have their PE ratios very high, their prices very high, premised on the idea they're going to grow very, very fast. If the growth slows a little, their stocks fall. They're the most vulnerable companies to this problem are the ones that are priced the highest for what they're doing. I'm not saying this will be a problem. I'm saying this could be a problem, and there's many problems like this to understand. I do think that TSMC and ASML are good investments. I have not invested in either one yet. I haven't persuaded myself that they're growing as fast as I think they can, that their revenue and profit stories, they seem reluctant to grow their margins, to raise their prices in order to increase their margins. They seem satisfied with a certain level of margins and a certain level of growth. They are not led by people who are trying to grow spectacularly. They're not trying to win the race to AGI, right? They're like, hey, if we can make some more money, if we can grow the company a bit and we can do these things, that's great. They're not as motivated for this massive growth as some of the others are. And I think that's a potential chokehold or bottleneck in the supply chain for everybody else. But it's easy to understand what these companies do. ASML is fairly simple, right? It's like lithography machines. How many machines do they make? They charge about $400 million a unit for the EUV machines. How many can they make? And don't forget, ASML has a supply constraint. Zeiss Optics, Carl Zeiss Optics, which is not a stock as far as I know, it's not publicly traded. They're a critical part of the supply chain for ASML, and they make key glass components, mirrors, lenses, whatever, that are essential for making these machines work. And maybe they can't grow fast enough for ASML to grow as fast as they want. It's just a lot of complexity in this part of the story. Next up, we have the world of memory and storage. That includes Micron, which everyone knows, SK Hynix and Samsung, which are not as well understood by what I see in US investors, SanDisk, I think most people know, and Kioxia. You have HBM memory, which is the critical memory for the latest AI racks, the AI data center racks. You have DRAM, which is critical in all kinds of applications, still important in AI, but important in all over the computer industry. You have NAND or NAND, which is like the SSD storage that is very common in phones, in laptops, and also very, very critical for AI data centers. And the demand for NAND in particular recently has driven up the cost of crucial memory for example, Apple products, and Apple has been raising its prices to its customers because its cost of getting memory has gone up. This is causing some price chaos across the entire tech sector. It's important to understand that little piece of it, but when you dive into it, the three probably biggest players here are Micron, SK Hynix, and Samsung. Very popular for American investors to think Micron is the big player. SK Hynix has 56% of the HBM market. SK Hynix basically invented HBM memory. SK Hynix is in the lead in the next generation of HBM memory. They're critical. Samsung is number two in HBM memory. Samsung is very large in NAND memory. SK Hynix is. There's a lot of things going on in here. The two Koreans, SK Hynix and Samsung, there's this crazy chaos in the Korean market. They've gotten so big, and Korea's a big country, but it's not that big of a country. And these two companies have gotten so big that the two of them together are like 40% of the Korean stock market. So when the Korean stock market goes into chaos, it throws everything crazy and their prices go nuts. And it's apparently all these Korean workers who like leverage themselves into these stocks, and then the stocks go down and then they're forced to sell, and it's just absolute chaos in Korea. And that's causing all these problems with stock pricing. And that affects Micron, that affects other companies. Looking forward, all these companies are investing in being able to produce more memory. Samsung and SK Hynix have a program in concert with the Korean government, a so-called millions of wafers plan, millions of wafers a month. That was mentioned by the ASML CEO. And when people talk about Micron, they talk about it like Micron is the dominant player in memory. They're not. As far as I can see, SK Hynix is probably the biggest straight memory play. Samsung is a big memory play, but of course, Samsung has other businesses like cell phones. And SK Hynix is the biggest in HBM memory, and their relative price, if I look at it the way I understand it, again, Korean markets are hard to understand, but SK Hynix just had an IPO on the US market, raised some money to help build fabs. So they are SKHY on US markets. They seem to me to be priced lower than Micron, and they seem to be in a stronger position than Micron. So I haven't decided what to do about any of this. I haven't invested in any of them. I am thinking about investing in SK Hynix as my fifth stock. I haven't sold myself on it one way or the other yet. I don't think it's going to happen anytime soon. SanDisk is worth looking at. I haven't looked deeply at SanDisk yet. Kioxia is a Japanese company that makes NAND memory. I haven't looked deeply at it yet. I think these companies could be very important. Demand for NAND is very high. If you can get your supply chain in order and you can grow your production of the thing that you make that's relevant to this AI stack, you can do very, very well. And the demand for memory is growing faster, maybe, than the demand for chips. I've mentioned before that AMD is using more HBM memory in their racks than NVIDIA, and there's some indications. I think this was biased because it came partly from Micron, but Micron and Meta did a research project, and they found that increasing memory had outsized impact on the performance of your AI, because a lot of times the GPUs or the chips, the the TPUs, whatever, the custom ASICs might be waiting for something to come from memory. So you have more memory than the GPUs wait less time. And you might end up getting more performance by having more memory. Again, that was a study from Micron. Micron makes money by people buying more memory. So I'm not convinced of that one yet. It was a one-shot study. I have a feeling that Nvidia has looked very closely at how much memory they need for their hardware, and Google looks very closely at how much memory they need for their hardware. And one study somewhere doesn't necessarily persuade me otherwise, but there's a lot of suggestion that the demand for memory might grow faster than the demand. First of all, the demand for everything is growing, but the demand for memory might be growing faster than the demand for, say, GPUs. So this is potentially a very good area to invest in, but just keep in mind it's very volatile, and memory has always been among the most cyclical of stocks, and they have high volatility, which makes their options. I do a series of videos on long-term options, and where Micron sits in that story about long-term options is kind of interesting. So if you support me as a YouTube channel member, as an X subscriber, as a Patreon supporter, you get access to my options videos where I talk about long-term call options. And I think that may be worth looking at. I haven't done a video in a couple of weeks because I've been traveling, but when I get back, I'll get back to doing those videos. Very interesting story here, worth paying attention to. This is, critical component of the AI supply chain. If there's a problem in the memory world, there's a problem in the entire AI world. I've got a category here called specialized semiconductor hardware. I'm going to be very blunt with you. I don't understand these three companies yet. There's a fundamental issue with trying to understand stocks. No one who studies 100 stocks at the same time can have anywhere close to the understanding of Tesla and SpaceX that I have, because those are two companies that I've been studying intensely for 10 years. Now, me, as somebody who's focused on Tesla and SpaceX for so long, and I've started expanding out into the AI space, I haven't covered everything yet. And when it gets to these three companies, this is probably where I'm weakest in knowledge. So I understand they're important. I'm not selling you on Warren's the expert on specialized semiconductor hardware. I'm familiar with Applied Materials. Before I dug into this, I'd never heard of Lam Research or KLA Corporation at all. But you can see they're critical players in the process of making semiconductors. And as I said before, if one of these companies goes down, if one of these companies is a serious problem, that can be a supply chain problem for everybody else. I intend to learn more about these companies over time, but I haven't devoted the time yet. And it's a simple problem. You can see in this video, I'm talking about more than 20 companies. And some of the companies are in China, and some of the companies are in Korea, and some of the companies are in Japan, they're in Europe. It's very hard to really become an expert on more than a few companies. I mean, I think I understand NVIDIA really well, AMD, there's several companies I understand well. So I just want to make this clear to you. If there's somebody out there who's your source for understanding AI, and understanding companies and investment research, and it seems like they're covering 20 stocks or 50 stocks. Can they really understand any of these stocks well? If you're spreading your time and your research and your understanding over 20 or 50 or 100 stocks, your ability to deeply understand one company becomes very challenging. And this is why, as Tesla supporters, and this is me at the Tesla Plaid event, right? I'm into Tesla deeply. Someone who there's so many investment analysts who cover so many companies who think they understand Tesla when they don't come close. Anybody who studies Tesla closely and then reads some research report from somebody who covers 100 companies, you see immediately this guy doesn't understand the company. Well, when I talk about some other company, the people who study that company more intensely are probably saying Warren doesn't know what he's talking about. Warren doesn't understand AMD. Warren doesn't understand Micron. Like those, if you're watching this and you heard me talk about Micron or AMD and you said, "Oh, Warren doesn't know what he's talking about," you might be right. You might understand those companies better than I do. I still think there's a fundamental problem. How do they grow faster than their supply chain? I don't think you can answer that by studying your company alone. You got to study the broader picture. But with that said, I'm telling you right now, there's a limited extent to which I can understand all these companies, but I think it's worth it. And if you're digging into the world of AI and you're interested, then looking into these companies more deeply is a wise step. And again, if they falter, any of these companies falters, if they slow down, if they stop producing, if they just don't grow as fast as the rest of the market needs, then the growth isn't there for everybody else. And that's why they matter. And that's why this is on my list of companies that I hope to understand in the near future. Again, like if I spend too much time on these, then am I letting my understanding of Tesla lapse? Or I'm trying to understand Google more because Google's really important in my view. I think it's worth more of my time to focus on Google than it is on these companies, but maybe I'm selling these companies short. I should pay more attention to them. This is one of the challenges of investing is it's really hard to understand the entire picture. And that's just the AI picture. There's a much broader stock market, of course, with thousands of stocks. You can't study them all. Some of the biggest players in the world of AI are the hyperscalers. This is where a lot of investment is happening, building out data centers. These are the people who are buying all the chips, and the AI models are running on their hardware. Now, I've left out Google and Meta and SpaceX from hyperscalers. I've also not included in what I'm going to talk about today neoclouds, but neoclouds are worth talking about. CoreWeave and Nebius are two examples. Their market caps are under $100 billion, and I have to have some kind of cutoff in order to keep the length of this video reasonably short and minimize the amount of time I spend trying to explain everything and trying to understand the market. As far as I know, there's no neocloud companies that are over $100 billion that are worth talking about yet, and I may be missing one. The key distinction of hyperscalers is they build out massive data centers and they sell compute. They sell use of their data center compute to other customers. It might be to Anthropic, it might be to OpenAI, it might be to corporations. There's a whole variety of stories here. And again, Meta and Google and SpaceX now are all starting to be in the hyperscaler game or already solidly in the hyperscaler game. I kept Google out of this and Meta out of this and SpaceX out of this partly because there's more to them than just being hyperscalers. So Microsoft and Amazon and Oracle, there's more to them than just being hyperscalers, but the other part of that is not really the AI business. Their primary focus has been other things related to enterprise serving customers in the case of Amazon, B2B, B2C for Amazon, B2B for Microsoft and Oracle, maybe a little bit of B2C for Microsoft, but they're sort of like routine non-AI businesses. None of these three companies has a frontier model, or as far as I can tell, anything close to it. But all of them have been very successful in the past. All of them are very large companies investing insanely large amounts of money building out data centers. When you do the return on investment, we're investing this much money in our data centers, and then you look at the revenue they get from that, it's huge. They're making a lot of money from this. They're being very successful. The markets, the big story with the hyperscalers is that a lot of investors in the markets do not see the demand the way I see the demand. And this is one of the fundamental underlying stories about investing in AI today is do you believe the demand is growing as fast as I believe it's growing, or at least faster than the markets believe it's growing? What I see is a world of demand being unconstrained. There's nothing holding demand back. There are people say, well, there just isn't enough money for it. It's like, well, if I'm spending my money right now on something else, I can switch what I'm spending my money on to AI. So the constraint isn't really I don't have their money isn't out there. The constraint is if there is a constraint, people are spending their money on something else now. Does AI become compelling enough for me to switch? I used to watch a lot of television. Then I watched a lot of YouTube. Then I spent a lot of time on social media, arguing with people on the X platform, making videos on YouTube myself. Then, there's a lot of, we shift our attention, companies shift how they invest their money in a lot of different ways. So there's a lot of money out there to feed the demand for AI that can come from somewhere else. The productivity from AI, increase in productivity, can create more value in the market, more essentially more wealth in the market, more money in the market that allows people to buy more. There's a lot of different ways for that to happen, but there's no fundamental constraint on demand. There's lots of potential constraints on supply. And that's why I see the prices of AI compute going up. We're already seeing this. So if the price of AI compute goes up, then these companies make more money. And everybody in the chain makes more money. And then you have this issue. We'll talk later about the frontier models, the companies that are selling them at the model layer. The model layer is very competitive, and people say, oh, that's going to destroy AI. No, if the model layer is competitive, then there's more demand for AI because AI becomes less expensive. And then there's more demand for compute, and that makes these guys make more money. You basically take away the margins from the model layer, and that shifts demand down to the hyperscaler layer. It means there's more demand, not less demand. So hyperscaler business, very interesting. Microsoft, one of the critical things here is that Microsoft has good contact with customers in businesses and homes. People use Windows. People use Windows in businesses, Windows products. There's a lot of connections there that allow them access to customers, and maybe that helps them. Amazon has, massive access to customers in B2C, shopping on Amazon. Shocking to me that they don't have better AI for that yet, but maybe it's coming. I think they use AI really well in designing their pages, in designing how they do things, and they are working on using robotics in their distribution system. But so far, at least on the customer facing AI, I don't see it. I just used Rufus the other day. It was terrible. Oracle, again, like Microsoft, a lot of big connections with business. So they have a lot of connections with business that helps them develop this. And Amazon has that through Amazon Web Services too. So all these companies seem like great companies. Oracle's taken a beating recently on the stock market. I don't understand why. A lot of these companies are getting hit hard because the market doesn't believe in the AI story. So when these companies announce we're investing $200 billion this year on AI hardware for our data centers, the markets are like, hey, we don't like that. Okay, well, now you're making a decision. Do you believe in the AI story? If you believe in the AI story, then these companies are good bets and their prices are depressed. Now, me personally, I think that some of the other hyperscaler candidates, Google in particular, SpaceX in particular, are better positioned for the future and are better bets on growing well and making money in the hyperscaler side of the business. We'll talk about them next. I created a group called Full Stack AI. This includes SpaceX, Google, and Meta that we were just talking about, which are hyperscalers, but they operate in multiple layers. Tesla also has large data centers and large amounts of compute. It's just in a different format, but all of them operate at multiple layers. Tesla is very clearly in the application layer, running real world AI in its cars and eventually in its robots. SpaceX, SpaceX through XAI Grok, Google through Gemini, Meta, they have frontier models that the other hyperscalers don't have. And they operate at so many different layers. Google and Meta and Tesla and SpaceX and Meta, they're all working on all four companies are working on their own chip design. This is to some extent true, at least with Amazon, maybe one of the other hyperscalers, that they're doing some level of chip design. But Google's been doing it longer. Tesla's been doing it a long time with its inference chips and Dojo. Meta has its own chip design team. SpaceX, obviously, SpaceX working with Tesla to develop the Terafab. So they're going to be actually manufacturing chips. I tend to think of the applications layer as something separate, and Tesla's obviously in the applications layer. To me, coding is the applications layer. So SpaceX XAI Grok, I use Grok build for vibe coding. I do use Gemini a little bit for vibe coding. I also use the frontier models, particularly OpenAI Codex for coding. These four companies are multiple layers of the stack, and there's a real advantage there if you think about it, is that if you don't really know where the advantages are going to be in the stack, being in multiple layers of the stack is a huge advantage. If the model layer becomes so competitive that it becomes commoditized, but you're making money at the applications layer above it and at the hyperscaler layer below it, and then the chip design layer below that, you're in the chip manufacturing layer, if there's a lot of margins to be made or a lot of money to be saved in your product, if you are able to operate in multiple layers of the stack. And that's what gives these companies a huge advantage. And to be clear, I'm invested in Tesla, SpaceX, and Google. Meta is pretty new to the frontier model space. They've been working on models for a long time. They have a new coding model. I'm not sure how broadly Meta's new model is going to succeed and whether they're going to stay at the frontier. My own experience before this recent change is that when I used Meta's AI as a chatbot, it was pretty pathetic. It was just bad. Have they gotten to the point where it's better yet? I haven't explored it. I haven't tried it. My gut is there's a chance that Meta will catch up and will become a big player in at multiple layers of the stack. And all of them. Tesla has access to customers through its cars. SpaceX has access to customers through Starlink. Google, probably more than anyone else, has access to just a ridiculous number of customers. Meta also, ridiculous number of customers on the consumer side mostly. They do have some business customers, maybe through advertising, maybe through some other products that they offer. SpaceX has some enterprise clients, related to launch, maybe. In my mind, none of these companies have the same B2B connections that you see in, say, Microsoft or Oracle or Amazon Web Services. But they're still substantial, and Google has a lot of that. Google is just sort of like they're the everything company. They're kind of doing everything. Google, Gemini just did a video about robots that they're working on. I don't think their robots look that impressive compared to what I expect from Optimus, but we'll see. So if you followed me for long enough, you know I've done plenty of videos about Tesla and SpaceX. I've done some videos about Google. I haven't really dove into Meta's story right now. I did invest in Meta, what was then Facebook in the past. I bought after their IPO dip. That turned out to be a good investment. I had Google a while back and sold it, and now I have Google again. I'm very optimistic about especially the first three, and I'm undecided about Meta. I think these are companies that are, if you're looking at AI, you have to look at least Tesla, SpaceX, and Google, and you probably should look at Meta too. And that's on my list of I need to study Meta more. My gut is just like it feels like Meta's been making a lot of iffy calls. There's a lot of criticism of Google for the same thing. Google has the bureaucracy problem. Google has the woke infection. Meta has the woke infection. Are they able to remove the woke infection so they're able to execute and deliver in a lot of ways? Now, Google, I'm more confident about. The thing about Google, and this is a little bit, biased because I'm Jewish and I'm pro-Israel, but Google's CFO is Israeli. Sergey Brin is noticeably pro-Israel, is openly pro-Israel. The previous CFO was Israeli. So and Google has operations in Israel. So the woke left has come after Israel, and the Google leadership doesn't like that because the Google leadership is pro-Israel. So it may be something that's helping them remove the infection, and that's able to help Google operate more effectively. We'll see. I don't know about that. I just know they are probably the biggest hyperscaler. They're really good at it. They are on board with the SpaceX plan of launching AI satellites into space. They are a large shareholder of SpaceX. So, Elon and Sergey are friendly. There's a lot of potential here for that. And I think Elon and Mark Zuckerberg might be, maybe able to work through their differences. There's a lot of potential for the tech bros to sort of get together and work together on things. And the thing is that the demand for AI is so large, it doesn't have to be like a tooth and nail fight. It can be like, how do we build together? There's a lot of opportunity for that without creating antitrust violations. So, I've clearly bet on these three, and I haven't bet on Meta yet, and I'm not convinced that Meta is going to continue executing or is going to execute well. But that's worth diving into, and I encourage you to dive into that. And I just want to add really quick that Tesla has the AI 5 chip coming. They have Dojo 3 coming. SpaceX is going to be using those chips. They're working together on that. Google has been making TPUs. They're on the 8th generation TPU inference and training versions. These are the two longest running companies outside of the traditional chip design firms who are designing their own chips. And Meta's doing some of that as well. And Google's TPUs are considered very, very good. And Google is also one of the largest customers of NVIDIA. They play both ends. They know how to play both bets. Some of their customers want to use NVIDIA hardware. Some of their customers want to use their TPUs. Their TPUs give them a cost advantage. Tesla's, and this is something people don't understand. Tesla has a massive amount of inference compute in the cars. The Tesla's AI model is real world AI. It's completely different from everybody else's model. And the inference compute is mostly done in the cars. So they have this cluster called Cortex 1, Cortex 2, that has, let's say, 300,000 GPUs. I'm making up the number, but it's in that ballpark. So it's not the largest, right? But most other training clusters, most other GPU clusters are putting 2/3 of their effort into serving customer inference. Tesla's Cortex doesn't have to serve customer inference because the cars are doing that. So Tesla's Cortex cluster is much more focused on training compute than the typical cluster. That's a detail people miss a lot. I want to make sure that's covered. Okay, the last publicly traded American company we're going to talk about, or easily purchased company in America that we're going to talk about is Palantir, which is in the applications layer, very clearly in the applications layer. The applications layer is basically people who use models to help accomplish something above the model layer. So Palantir is one of these companies that I've never fully understood. The problem for me is there's nothing wrong with Palantir. The problem for me is I don't know how to value Palantir. I'm a napkin math guy. Tell me what the unit is. Tell me what the revenue per unit is. Tell me what the future growth is in units and what the future story is for revenue and costs. And I can try to understand that. I've never had a good explanation to me of exactly what it is that Palantir sells, what the units are, what the revenue per unit is, and how it grows. I'm very impressed with the CEO, Alex Karp. I've seen him a bunch of times. My general understanding is that they use something called a forward deployed engineer to go into a government agency or a company and use Palantir's software, which is a layer above the model. They call it ontology, to use AI models, and it can be frontier models, it can be open source models, but protecting the company's or the government's information from the model company and use it to run your business better. Now, what I don't understand about Palantir is okay, you've got into a company, you've helped them run their business better. The first year you help them 20%. But after the first couple years, like how much more is there? How much more gain is there from having this software in your company? I don't know. I don't see that. It seems to me that your individual customers, your revenue would decline from them over the years. How quickly can you grow to other companies? How many other companies want this? I don't see there's a lot of effective competition for Palantir. There's a lot of stories that Anthropic and maybe OpenAI are trying to compete in the same space, but as best I can tell, they're not as good at it. The challenge of being a forward deployed engineer and going into companies and doing this right, I think Palantir has a secret sauce for that. And as far as I know, no one else really has what Palantir has for that. So I don't know what their competition is either. It's just I think it's a really interesting company. I have friends who are really high on Palantir. I think Palantir stock is very volatile. And they've obviously grown over the years and done really well over the years, but what is their real story? What's the story 5 years from now? What's the story 10 years from now? I don't see it. I'm not saying it's not there. I'm saying I don't see it. I'm not including in this Anduril, which is another applications layer company that primarily serves military, government contracts. They're not publicly traded. They're at the application layer and sort of running drones. I don't know to what extent they're using large language models or what the AI is that they're using. And I don't have a really good grip on what else is happening in the application layer in a large scale company. This is the only one I can think of. If you know of another one, Tesla is obviously an applications layer company, but they're a multi-layer company. The robots, the Tesla runs, the cars, and eventually the robots, that's an applications layer company. I think coding is arguably applications layer, although it tends to be built into the model, but using coding to do things maybe is the application layer. Maybe the coding itself is the application layer. That's a little fuzzy spot there. So I just wanted to cover that briefly. We're going to move on now to the pure frontier model companies. So the frontier model space right now includes OpenAI's ChatGPT Codex and Anthropic, Claude, and Claude Code. And then you have XAI, SpaceX XAI with Grok. You have Google with Gemini. You now have Meta. I'm probably missing somebody. There's probably a fifth or sixth one. That these are competing at the Cursor, which is within SpaceX now, is competing, at least on the coding level, at the model layer. And I guess I would argue that Tesla has a frontier model, but it's not an LLM model. It's the only true real world AI frontier model. So the thing about OpenAI and Anthropic is they're not publicly traded. There's a lot of rumors about IPOs. It's not clear when they're going to IPO. They're both in the ballpark of $1 trillion valuation now. If they do IPO, they will be among the largest valuation IPOs in history. I'm skeptical about the model layer. I think that, developing the best model is good and there's going to be a market for the highest level of intelligence. But if open source models or low cost models are 3 months behind you at the level of intelligence, I think the value of having very smart AI, there's a real risk that it's commoditized. Like, what is it that your model offers that I can get today? Like, I have an iPhone 14 Pro. I haven't upgraded to iPhone 17 yet. My iPhone 14 Pro is good enough. Do we reach a point where your frontier model is not that much better than the low cost models? And compare that to the iPhone 17 Pro versus the iPhone 14 Pro. Is the gain significantly bigger than the gain between the iPhone 14 Pro and the iPhone 17 Pro? I went to the Apple store. I looked at the iPhone 17 Pro. I'm like, why would I pay for this? My iPhone 14 Pro is still pretty good. I don't get it. So that's an open question. And that's why I don't think the pure frontier models are necessarily a good bet. And maybe that there's some outsized value there that I don't understand. I just wonder, like, what are the big things we're expecting AI to deliver? I think to some extent we're going to be seeing AI deliver things that we don't expect. But within the world of what we do expect, anything they do is going to be commoditized within 6 months to a year. So they're selling something for $50 a million tokens, and then 6 months later, somebody else is selling essentially the same thing for $1 per million tokens. What are you selling that's so compelling? And there's going to be some customers who are willing to pay extra for the latest intelligence, but I think the vast majority of the value that's going to be in the AI world is going to be below the model layer. Because if you're buying a million tokens, whether you're paying $1 for the million tokens, you're paying $50 for the million tokens. The clouds and all the hardware leading up to that, they're still making the same rough money that they're making. If the people who are selling tokens for $1.50 a million tokens, or if they're paying the same price for the GPUs that Anthropic and OpenAI are, then the value, everything below the cloud layer down, the hyperscaler layer, all the way down to the optics that go into the lithography machines, all the layers of supply below that, all that value is still there. There's people like, oh, if we lose the model layer, that's everything. No, if we lose the model layer, we're going to lose the model layer. That's not a big deal. And the application layer will still have its value. So the decline in pricing of the frontier models is a benefit to everybody except these two companies. These are the only two losers in that world. I think there's some other startups that are potentially losers in that world that are pure frontier model startups. But everybody else wins. Because the lower you bring the price of actually delivering AI to the customer, whether it's a business or the consumer, the the more demand there is for everything else. So everybody else has more demand. So like for me personally, I haven't tried to invest in OpenAI or Anthropic. I don't intend to invest in an IPO. If they do IPO, I will certainly read their IPO documents and I'll consider it. But what I see so far, I don't see how they're that much better than, say, Grok or Gemini, or I haven't looked at Meta's AI recently. I have friends who use Kimi K3 or whatever, the Chinese AI models to code, and they're like, this is really good. Why would I switch to OpenAI or Anthropic? It cost me, 1/10 or less the cost of using these other models. I use Codex. I mean, I'm happy with Codex, and I'm on that $20 a month plan, and so far I'm good, but they're not making a lot of money on me. They're making money on people who are using a lot more. I'm not using that many tokens. And I'm using Grok, and I'm using a lot more tokens with Grok, and Grok is much less expensive. So, but the lower end of OpenAI, the 5.6 Tera is pretty inexpensive and pretty fast. But that doesn't, they're not going to be making a crazy amount of money if the vast majority of the customers are paying $2 per million tokens instead of $25 per million tokens. So I don't know how these companies successfully monetize. I haven't seen a great argument for how these companies successfully monetize. The unit's clear, a million tokens, right? The pricing is clear that Anthropic right now is around $50 a million tokens for their high-end model, and OpenAI is maybe close to that. Can you sustain the pricing? Because if you can 10x your tokens, but your pricing falls by 50x, then that's not a good business model for you. That's not a good long-term plan for you. I don't know where this goes I just think this is the most speculative layer of everything in AI. For me, like, I don't see the compelling case for investing in them. Okay, if you stuck with me this long, we're close to the end. We're going to talk about the last segment that we can talk about. It's not a company that, in general, I think you can buy Xiaomi stock, maybe Alibaba stock. I'm not sure how many of these others you can buy. I haven't thoroughly researched the Chinese AI companies. I pay attention to Xiaomi partly because they have EVs. I'm aware of Huawei. I'm aware of Alibaba and Tencent a little. The other ones I don't know that much about. But China is basically this wild card for the entire story. If China succeeds in ramping up their AI production, and it seems like they are, and they have massive energy to support massive data centers, they don't have the same resistance to developing energy supply or developing data centers. China could do very, very well in the AI future, and I don't know that there's much America can do about it. The only thing America can do about it is compete, right? Do a better job of making AI, open up the energy, open up the data center world, and then we'll succeed. SpaceX and probably Google along with them and Tesla along with them will open up AI in space. And that will be bigger and more energy than even China can do. But that's a long-term play. And the short to medium term play, they're making real progress. And how does that affect everything in our stack of AI stuff? Like, how does it affect the layers? How does it affect the energy providers? I think the energy providers are fine. How does it affect the data center providers? How does it affect the model layer if all of a sudden there's a lot of competitive Chinese open source models? How about the memory makers? If China succeeds in developing memory, I think it might be CXMT is the one that's doing memory. If they succeed in developing memory at scale, then all of a sudden the price that Micron and the Koreans can charge might go down. Even if it doesn't go down in the US, it might go down globally because there's other people buying this stuff. If they come up with chips that are competitive with NVIDIA, and I think that's unlikely that they're going to succeed in developing chips competitive with NVIDIA and Google's TPUs and Tesla's AI chips. I think they'll get there, but I don't know if they'll ever catch up. But if they do succeed, if they do accelerate and they do make progress and get ahead of everybody and a lot of this stuff, then all of a sudden maybe there's competition for chips and it's harder to make money in the chip layer. In the infrastructure layer, whether it's networking, hardware, all this other hardware. Right now, the approach of the American government seems to be, well, let's ban them, let's block them. But there's a lot of the world that's just going to keep buying Chinese stuff if they can buy Chinese stuff and it's less expensive than American stuff and Korean stuff. I don't think that's a good long-term strategy. The long-term strategy is compete better. But I just think if you are trying to evaluate investing in the AI space, this is probably the biggest wild. There's a big wild card because if the fantasy or the terrifying theory that people have that China's going to invade Taiwan, that's a big impact on TSMC. It's a big impact on the entire supply chain. I don't tend to worry about that risk, but it's out there. People worry about it. But just the fact that they can compete at multiple layers of the stack and what effect does that have if they compete at different layers of the stack? Like, I don't think they're going to compete at launch. They're 10 years behind SpaceX on launch. I don't think they're going to have like a Starship clone that's going to be launching, once a day or once an hour anytime soon. They're not at that level. As far as I know, they don't have a real world AI that's truly competitive with what Tesla's doing. They have a lot of robots that are doing a lot of things, but they don't have the fleets of robotics that are generating data. They don't have the compute. To the extent they have compute, are they going to devote their compute to real world AI or what are they devoting their compute to? I don't know how much they can compete with Tesla on that. Go out 5 years, we'll see. Maybe they're very competitive. And ideally for me, we have more free trade with China and China buys robo taxis and China buys Optimus robots and we buy energy from China. We buy solar panels from China. That seems like a much better world to me. But I don't think we're getting it from American politicians and I'm not sure we're getting it from Chinese government either. That would be a future that would make the most sense for the people, as if anybody cares about us. And for the investors, as if anybody cares about us. So I hope this survey of the landscape of AI has been helpful. And, I'll probably try to do this once a month, just sort of like a summary of what's the latest for this panoply of companies in the AI space. If there's something new with China, we'll talk about it. If there's something new with other companies, we'll talk about it. And I hope this is helpful. Let me know whether you like this approach of like this big, broad spectrum, big panoply of here's what's going on in AI this month. We're at the beginning of August, so ideally I do it every month, beginning of September, beginning of October. We see how it goes. And related to this, I have members only videos, option specials in particular, where I talk about investing in AI, long term call options as a strategy for betting on the future. Like, in some of the cases, you can invest in a company that's a very promising and very stable company. And if you buy the stock and it 3Xs, you make 3X. But if you buy the long call option, you might get a 10X. And it's a risk. It's not perfect. And I talk about all that in my members only videos where I do option specials and I do some other things. So if you support me as a YouTube channel member, as an X subscriber, or as a Patreon supporter, you get access to these videos. And hopefully that's helpful to you. It's not the only thing you should look at, but it could be valuable. Again, let me know in the comments what you think about what we did here. And thank you so much for watching.